Day, an investor education initiative by Kotak Mutual Fund and ET Now, has paved the way for a financial revolution by urging investors to invest in systematic investment plans and thus contribute to India's growth story. Taking a deep dive into 2019, a panel of experts got together to discuss the impact of markets on returns in the times to come.
So we've been talking about the importance of SIP, but I'll try and get you some tip. Tip to make a better SIP. When you are investing in stock markets, what is the view? There is general degree of nervousness after the selling in mid and small cap stocks. But I want to start with the interesting part, and I'll first move into Harsha and ask for a very general market view. Harsha, we are about 10 to 12 months away from elections, and we know how market historically have reacted to elections. When the verdict was not very favorable, what markets were expecting, it was a circuit down in 2004. So why should one not sit on cash or not get worried about investments?
Nikunj, you are very right that it's very difficult to predict some of these events. The only thing that we will be sure of is higher volatility during this entire period. But how do you look at this volatility is what is going to differentiate between a long-term investor during this entire period. But how do you look at this volatility is what is going to differentiate between a long-term investor and a short-term investor, and also how much wealth you're going to create in the long term. For example, over the last several years, every 5 years or even lesser than that period, we have had governments coming and going. Sometimes same government comes back, sometimes more stable government comes in, sometimes there is a fractured mandate. But still, equity as an asset class has been the most productive one for investors. So those who have taken India's story as the focus point, they have made money because they have forgotten what the volatility in the interim period has been, and hence you have seen healthy double-digit compounded returns on equity. But yes, if you are investing for next 12 months, next 6 months, how this volatility will play out will determine your returns, and hence it is very, very difficult to predict whether you will make money or whether you will lose money in this volatile period. So the way we should approach this event or any other event where the prediction is going to be so difficult would be to have a long-term view in mind and also make staggered, disciplined investments. You should be able to make a real wealth in that sense.
Fair point. Markets, they follow a cycle. Within small and mid cap, within small caps and large caps also, there is a pattern which is at play. 2015, 16, 17 have been great years for small cap investors. Has the cycle now decisively moved in favor of large caps?
I wouldn't say that there is going to be a shift in preference of the markets one way or the other, and permanently so. There will be times where large caps will make more money than small and mid caps. There will be other times when mid and small caps will make more money. But it is a given that it is easy by virtue of size and base for small caps to really become big over a period of time. While because the base of large caps is larger, you will get low volatility returns there. But for them to give you returns equivalent to small and mid caps, quality small and mid caps, is going to be slightly difficult over long periods of time. Of course, short term, you may see outsized returns from large caps and less from small and mid caps.
So I'm going to turn, Hemant, to you and talk about the way how markets have been volatile. It's not a great feeling, right? So what do you tell your clients?
Well, Nikunj, the way I look at it is, what we tell clients is, when you're investing, especially I'm talking about the guys who are investing through SIP, okay? And if you have a clear term horizon in your mind, for example, let's look at someone who is investing for his retirement, which is, let's say, 25 years from today. I mean, I don't think for him, what happens in the market today really matters. What we tell the client is go back and look at your average price before Jan. Every month you're investing at a higher level. This is the time when you're investing at a lower level. These are the time which will bring your average cost down. And I think very important, especially for the guys who are investing in equity through SIP, is that you need to understand that volatility is a natural phenomenon. And I think how much success you will get will depend on how you handle this volatility. Investors have made huge money from the equities. Equity requires two simple things. One, you need a time commitment, and the time commitment comes from where? It doesn't come unless and until you have a purpose attached to that. So if I have a goal, my retirement or my child education, I have a purpose. That purpose allows me to remain invested during the volatile time. So I think it's very, very important. Second thing is you need to be a regular investor. The regular investor, one way obviously for a common man is, or anybody, is invest through SIP. The second is even if you can't invest through SIP, you should be making a commitment to yourself that every time I have some money to invest, I'm going to allocate to this. If they come in with the right kind of expectation, if they come with the right kind of objective in mind, time horizon in mind, handling volatility, I think becomes much, much easier.
You're one of the oldest distributors in India. But my question to you is that why suddenly last 3 years, and we are very proud of it, the fact that the SIP culture has made a comeback. The mutual fund industry is about 20 years old, but the way SIP has picked up, it's been extraordinary only in the last 3 years. Why is that?
I think if you look at the trend of the industry, last 15 years was the major growth which has happened in the industry. And I think in India, there is always a culture of regular savings into different instruments, whether it is a recurring scheme with the banks or whether it is a recurring with the postal schemes. So that culture was always there in our country. And that was predominantly debt investment, and as well as there is a limit of 3 years, 5 years, and it was a 10-year based schemes. But in this last 3 years, I think media also has played a good role. Thanks to media, thanks to, I think there are good advisors in our country, those who have passionately promoted SIPs. And top of that, if you look at the return of 5 years, 10 years and 15 years of SIPs, is really proved that that power of compounding is working even in mutual fund SIPs.
My next question to you is that what to your mind are the big mistakes some of the SIP investors are doing? SIP pickup हो गया, बहुत अच्छी बात है, मगर क्या right SIP हो रहा है? When you look at the folios you manage, the advice you're giving, you got a very large client base. What are one or two common mistakes you think every client is perhaps doing?
See, I think जो common mistake है, while they are investing, majority of the times they are not very clear on the idea कि मैं 5 साल के लिए कर रहा हूँ, 10 साल के लिए, 15 साल के लिए कर रहा हूँ. तो eventually they started off with the goal कि I am investing for my child higher education, but sometime during that journey, in between, then काम किया है कि whenever our advisors take the SIP for a particular goal, say for example for their child higher education, तो वो SIP के साथ वो बच्चे का फोटो लगा देते हैं हम. तो whenever you go and see your portfolio, वो SIP के सामने आपका बच्चे का फोटो दिखेगा कि SIP आपने ये पर्टिकुलर गोल के लिए किया है. तो वो एक इमोशनल अटैचमेंट आएगा.
As a small and mid-cap investor, what is the biggest challenge for you? Valuations or disruption?
Valuations for sure. Valuations are, I mean, if I'm going to buy, let alone equities, if I'm going to buy to a retail store to buy a shirt, I would prefer to buy it for 500 rupees, knowing that it was 1,000 rupees a week earlier. And same way in small and mid-cap stocks. If the stock was available for 200 rupees till recently, and today it is available for 100, I'm getting greater value for sure, unless the business, if the business has remained as good as it is, or it was till about a month ago. So valuations are critical when you're buying a small and mid-cap stock. In addition to that, of course, the ability of a management to scale to a level that will take them to a different, space in terms of their growth, that becomes critical in the small and mid-cap space. Of course, in this journey, you can, over periods of time, see small and mid-caps doing nothing, like 1.5, 2 years, you'll see stocks doing nothing. And then in the next month, they'll double. So, as I say, the ability to be patient and sit on your seat and not do anything, which is very boring personally for anybody, but not to do anything is critical in small and mid-cap investing, because that's what makes you the money, much more than going in and out, doing a lot of trades. That can lose you opportunity.
I'll open it to the floor. Maybe some questions.
In the USA, there is a move to impeach President Trump. What is the likelihood of this happening and its implication with regard to stock market in India? Thank you.
First of all, I really don't know. I'm not an expert on that subject at all. But all that I can say is, whatever happens to that, I think the impact on India is going to be, if at all, will be only knee-jerk in that sense. And if there is more volatility linked to only that subject, I think it will be a time to actually increase your equity allocation and buy some more stocks in India or some more funds in India. I think we attach too much importance to what is the current issue that is being highlighted in media or elsewhere. And many a times these won't have any significant or direct impact on our stock markets. I think the way we look at it is to analyze businesses and buy those businesses at right valuations. If you have done that, there could be volatility because of many other issues in the world. As long as your business is running properly and there is no impact on that particular business, the valuations on a daily basis will go on up or down. And if it is too significantly down because of some external reason which is not going to affect those businesses, then that should be a buying opportunity.
Sharing his key insights was Nilesh Shah of Kotak Mutual Fund, who dissected the concept of financial planning to the enthused audience.
There is a Sanskrit saying which I have recently learned. So if I pronounce it wrongly, my apologies. But this is the, Chaturmas for Jains, and Maharaj Sahib give Vyakhyan. So in one of the Vyakhyan, and maybe the audience was Jain, but he still mentioned, Dharma Mulasya Artham. Matlab, Dharma ka mool bhi arth hai. And I thought a Sadhu Maharaj talking about earth was a bit unique. But it probably shows that our forefathers actually gave as much weight to commerce, trade, money as they gave to other parts of spiritualism. I think that's lesson number one. It's as important to earn money as it is important to follow path of spiritualism. The second thing is, how do we make money? By now, all the mutual funds, distributors like Jignesh Bhai, Ram Bhai, they have put enough information in public domain about what needs to be done. But when we meet clients, we still find that not all of them are able to do what is appropriate. And again, I go back to Mahabharata, which explains why people are not able to do what is actually good for them. So just before the beginning of epic war, last night before the war, Krishna Bhagwan goes to Duryodhan and he tells Duryodhan that, Pandavas are your co-brothers. Why don't you give them what is legally due to them, what is morally entitled to them? And Duryodhan says, no, I will not give anything. Then Krishna Bhagwan tells him, saying that you just give 5 villages to them, not the half empire. Keep whole of empire with you, just give 5 villages and I'll ensure that they will not go to a war. Yet Duryodhan says, no, I will not do it. Then Krishna Bhagwan talks about dharma, what is Duryodhan's duty. And then Duryodhan tells him, which is probably what is applicable to all of us, Janami dharmam, nachme pravrutti, Janami adharmam, nachme nivrutti. Oh great Krishna, please don't tell me what is right, what is dharma. I exactly know it, but I am unable to follow it. And don't tell me what is adharma, what is wrong. I exactly know it, but I am unable to desist from it. Emotionally, in our mind, that Duryodhana is still alive. It doesn't allow us to do what is appropriate for us. We know eating pizza, junk food will increase cholesterol, but फिर भी खा लेते हैं. The same thing applies in wealth management. Same thing applies in creating wealth. And we again find that instead of becoming long-term investor, people end up becoming short-term trader. Instead of having patience, people want instant gratification. Instead of buying blue chip, we buy kachra expecting results of a blue chip. We end up doing lots of things which is not required to be done. We don't do what is required to be done. And which is where we made this attempt of SIP Day. Mutual fund is a product which can meet everyone's need, but it won't be able to fulfill anyone's greed. So we are there for need purpose, not for greed purpose. India was $250 billion economy in the early 90s. Today it is $2.5 trillion economy. We have roughly grown 10 times. And in this 30 years, in this 10-time growth, we created opportunities like Infosys, HDFC Bank, Kotak Bank, Sun Pharmaceuticals, and so on and so forth. Now, over next 7, 10, 12 years, this $2.5 trillion economy will become $5 trillion. There's no guarantee that it will happen, but if all of us continue to work as hard as we have worked in past 30 years, this 2.5 becoming 5 is quite likely. Now imagine whatever you have missed out in last 30 years, it's possible to capture it in next 7, 10, 12 years, because that's what new India is going to get created. Someone mentioned that I am 55 years of age, 60 years of age. I have retired now. What do I do? Doesn't matter. You still have as much opportunity to make money as you had 30 years back, provided you go and capture those opportunities. If you can't capture it directly by doing your own research, then mutual funds are a convenient vehicle. I would like to reiterate, be able to meet to the need of the people, not greed of the people. I am a vehicle which can optimize return, not maximize return. I am a vehicle which will optimize risk, not minimize risk. But on a risk-adjusted basis, we will still be able to create wealth for you, provided you use the tool correctly. Finally, if I have to sum it up, rule number 1, money is not everything. Money is not everything in life. But make sure that you have made enough money before you make such statement. This statement has come from none other than Warren Buffett. And while I do respect my mother, I have consciously followed Warren Buffett. Make sure that you have made enough money before you say that money is not everything in life. Money is not important. Even our Shastras, Vedas also say, Dharma mulasya artham. Earth is necessary. We are in the profession, business, whatever you call, of making money, making you wealthy. And this program, along with ET Now, is to give you that tidbits, give you that information, give you that encourage, so that you can control your Duryodhan. Thank you very much.
Over the 3 editions, SIP Day has taken the initiative to educate and empower first-time and seasoned investors by becoming the one-stop interactive platform for them to understand SIPs and the best possible places to invest in order to secure their future. That's the power of knowledge. That's the power of creating and compounding your wealth. That's the power of SIP Day.
Times Influence Initiative.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.